In today's video, we're going to take a look at STZ. Now, this is not really the best setup ever because we don't have the moving averages on the right side. We have price below the 200. We have price below the 50 as far as simple moving averages. And you also have the 5 and 13 in a sell mode. So why would I even consider looking at this? Well, I have to tell you that before Tesla rallied like 80 bucks, it was in the same exact position. None of the moving averages were in its favor, but I did have time and price. So that's why I'm willing to look at a very low risk entry on this one, and I'll show you why. First of all, if I'm going to look at any counter trend trade decision, I do want to see timing there, and in this case I see 18 days down versus 19 days down, so there's the time symmetry there. I also see, let's see, high to high. Well, this is just a 50%. That also came in on the 17th. The actual low is made on the 18th. And then there's the one other cycle, which is the high to high. 1618 came in on the 18th. So we did at least have 3 different cycles that came in right around where this low was made. But how do we have a low risk entry? Well, you can actually go down to the lower time frame chart. So I'm going to show you a 30-minute chart of STZ, and what we have here is basically 100% of a couple of these prior swings projected from this last high that also just happen to overlap a 618 retracement. So even though it's not the highest probability trade setup, there is still a relatively low risk entry that can be defined, or your risk can be defined underneath this 213 area. Okay, so far we've held above this area that includes the 618 plus the symmetry, and if we continue to do so, then you can actually look at some sort of bullish spread, or you can I guess you can do a credit spread, or you can do a vertical spread. It wouldn't be a ridiculous amount of risk because after all this is a counter trend decision, and then just consider yourself wrong if it breaks underneath this area. Okay, so it's not the best on the books, but it is relatively low risk to what you could potentially get if we do indeed start to see more of a corrective rally from this last low.